Good evening. Ira Epstein with your Metal Market Update. And this update's for Monday, the 4th of April, 2022, getting on to 7:30 p.m. Central Time. I'm late because I just did a special report, and I did the report on the S&P 500 and the strength that April often brings to that market. Then I discuss in great detail the idea of the recession and the factors that also go against the recession happening, and an indicator that you'll want to be looking at, but I'm not going to spill the name of it at all. But it has a great history that telling you when you get to a low unemployment like 3.6, how much you have to rally off that number in order to get the indication that a recession is in fact happening. It's all in the special video report. At any point during this video, you can just bring your cursor up here, click that, and that'll get you to the fill-out form, and you'll be able to see right after that. No, we don't send you something else. You just fill out the necessary papers, and away you go to view it. So where are we? I think we're pretty stable in the metals. That's the right word. We seem to have found a home in the 1930s in the gold. The silver market, no, it's not $26 anymore. It's closer to 24, 24 and a half. Copper market is still the most powerful, pushing again the 480 level, and that's even with the dollar slightly higher at this point. Now, when you look at the gold market, we've been in this pullback correction. I mentioned it last week. I'm mentioning it again. You can see how the market's had lower highs, lower lows. But as long as it's over the 18-week average, it's just a correction. Could it pull back to that number? It certainly could. Does it have to on the weekly chart? No. Daily charts are a little different. They're quicker and they act differently. What is this now going to be? That becomes the biggest question of all. And I don't know if that's a head and shoulder formation. I don't think it is. Is this a base that is forming, that if you get out over here, we get a pop again? Could be. Is this an area where if you get under these lows, you just break down again, and that becomes the sideways top? It could be any of those things. The current trend, if you look at the peaks and the valleys, you've got on the swing line study, which are these brown lines, lower highs and lower lows. That is bearish. The market is underneath the 18-day moving average of closes, and when a market gets under it, it often comes back to challenge that number to see what to do next. And that's exactly what's going on there. This is the 100 to 200-day moving average of closes. You can see how the Bollinger Bands are narrowing in, which tells me there's probably not a big move coming either way right now. I wouldn't be surprised if they narrow in and you spin around and just go sideways for a little bit. But the bears have the edge unless you take out 1955. Should the market decide to fall, I'd look for the support at 1905.60. By the way, let's go back to this. What if you take out 1955? Well, wherever the upper Bollinger Band is could be an upside target. And on this particular chart right now, if you were to take that out and not take out the lows of Monday, today, you'd have higher lows, higher highs over the 18-day average, calling for that. So what do the bears want to do? The bears are going to defend their position likely right here. It's not the best defensive play. Why? To get up to that number, if you take a look at the high of today, 1941.60, and the 18-day average for tomorrow, which is the session we're in right now because it's Monday night, 1942.60. So I'd have lower highs but slightly higher lows. Not the ideal place to be selling from my perspective. The gold-silver continues to lose. In other words, silver's losing the gold, not as strong as the gold market. And you see this on that chart. Lower highs, lower lows, bearish. You'd have to take out this high right over here, which is 25.26 and a half, to break the downtrend, and a close then over 25.16 and a half would turn the trend up. Here I think the pros will sell into that 18-day average because it's underneath everything, and 25.26 and a half, you don't hit that until you first get through that number. It's a better resistance point. Copper, be careful. Every time you hit the upper Bollinger Band in fairly quick order, you get a correction back. And this isn't what I call the necessary part where you've narrowed in the way you did over here. This is a wider berth, as you can see, than this, so I don't think you've got the sideways action requisite to just run. But remember, supplies of copper are notoriously low right now. They're not expected to pick up. When China comes out of this massive COVID attack that they're having, by the way, Britain's getting one now too. So we've got to be careful in America. It's under the radar, not that much. We are well vaccinated, but this new variant is coming. And how much damage it does to world economies, don't know. But as the economies get through it, especially China, as they come back, they're all going back to their factories. Imagine 26 million people in Shanghai are in lockdown. They can't go anywhere but for a COVID test. The army is out, and I was reading something like 20,000 other people that are checking on people throughout Shanghai. So very important what's going on there. In the platinum market, looks like we're running out of momentum for a bit here. You're still in an oversold territory. You came down, couldn't get to the lower Bollinger Band after making a run at it here and missing it. I don't know. Maybe you've taken the lion's share out of this market on the downside. And the palladium is trying to come up here. You had an embedded reading that you lost. That often results in price and the 18-day average making a run at each other. We'll see. It doesn't have to be the 18. If you look when you lost the embedded reading, which was this day, the reason I'm saying the 18, you're already on that. Normally it's the next moving average, and that's my thought process, that it can get up there. And on the dollar, as we look at this, that sideways action, just now spinning around. Wednesday, we get the notes from the FOMC on ideas there. This month, we get the Bank of Canada and the Reserve Bank of Australia with their interest rate decisions. You know that it's bank upon bank that's going to be raising rates, so let's see just what happens there. And as I said, I've done my special report on stock indices. I did it on the S&P because out of the past 25 years, we have rallied 20 out of those 25 years in the month of April. So I bring on the seasonal charts, price counts, monthly chart, weekly chart, daily charts for you. It's the whole slew of everything. It's all focused on the S&P because it's not the other indices that have this track record. It's the S&P. I discuss what about a recession? What about the inversion that we're getting right now, where the 2-year has gone over the 10-year note, which it did again and stayed there today as well. And a counter to that is another indicator that you want to look at, but it's all in the report. So you can go to www.iraepstein.com. Obviously, you want to go into our special report area there. Remember, the easiest way to do all this is just click up here. It'll take you right there. I'm Ira Epstein. You have a great day. I will see you tomorrow.